Hi everyone, Russell Stout here with Excelsior Wealth Partners. I want to take a moment to address some dramatic headlines you may have seen recently surrounding Venezuela and U.S. involvement there. And more importantly, what it does and does not mean for your investments. From a political standpoint, the situation is extraordinary. But from a market standpoint, the takeaway is actually far more measured. Despite Venezuela's massive oil reserves, its economic importance today is a fraction of what it once was. In the 1970s, it produced about 8% of global oil supply. Today, that number is closer to 1%. Its share of global GDP has collapsed as well. That's why, even with regime change, markets have taken this event largely in stride. Oil infrastructure remains intact, global supply is currently ample, and there is no immediate shortage that would meaningfully disrupt energy markets. This is a good reminder of an important investing principle. Not every headline is a market event. Looking forward, the bigger investment questions aren't about Venezuela. They're about global leadership, valuations, currencies, and interest rates. One of the most important developments coming out of 2025 is that U.S. market dominance has softened. American stocks still had a solid year in absolute terms, but they significantly lagged international markets. Why? Starting valuations. Countries and regions that entered the year with lower price-to-earnings ratios generally perform better. That tells us something important. Valuation matters again. This also challenges the idea that we're in an everything bubble. Investors are clearly differentiating between expensive and attractively priced opportunities, particularly outside the U.S. Another key factor to watch in 2026 is the U.S. dollar. A weaker dollar tends to support international investments, and future Federal Reserve policy will play a major role in determining whether that trend continues. So our focus remains steady. Diversification beyond a single country or theme. Being valuation aware, managing risk while staying positioned for long-term opportunity. As always, we're monitoring these developments closely and adjusting portfolios thoughtfully, not reactively. If you have questions about how global shifts like these impact your strategy, or if you'd like to review your positioning as we head deeper into 2026, please don't hesitate to reach out. Thanks for your time, and we'll talk again soon.